All right, so I'm going to guess that you want to get the best deal on a mortgage. I know anything I go, if I'm buying a car, which I did last year, home equity line of credit, I'm always trying to figure out for myself, how can I get the best deal on a mortgage, on a refinance, on a home equity line of credit, on a car. And so we all want those things. The problem is when you go on the internet and look and do your research, especially with mortgages, it is so confusing because there are so many different numbers. Banks are so good at playing this game, and it's really hard to know where to even start to know if you're getting a good deal. I look at people all the time that send me loan estimates, closing disclosures, and they are paying way too much for their mortgage, but they really don't understand why. I was looking, I did this video back about 5 years ago. If you're on YouTube, how to get the lowest interest rate on a mortgage. And it has 52,000 views. Very relevant today. I'll link to it down below where I went in super detail on 3 steps to make sure you're getting the best deal on a mortgage. I don't know what I was thinking with that orange background, and it's kind of hideous, but the video is definitely really, really relevant. So in that video, and again, I'll link to it below. I'm not going to go into everything in this video, but one, there's 3 simple steps. One, understand what fees that the lender is responsible for. Most fees are third-party fees, and the lender that you're talking to, the bank, the mortgage person, they don't even control those fees. So there's pressure to make those, to quote those fees really low, right? But you don't pick the title company. I don't pick the title company on a purchase. The seller does. So most of those fees are going to be whatever they're going to be. That's not what you're, comparing other lenders to. So I'm going to also link down below to understanding closing costs. Part of your research is you do want to understand the person that you're talking to, what they can control. Then 2, what are rates? What is a good deal? What is the prevailing rate? What are the costs? What should they be? And so that's step number 2, which we're going to cover a little bit in this video. And then 3, Google or research the person that you're working with, not the company. Google the person. Because if you Google Wells Fargo, that's not going to help you. Remember, at the end of the day, the person that you're dealing with helps dictate the deal that you get. They also are going to be the person that's responsible for protecting your money. If the transaction doesn't close, the agent doesn't lose, the title company doesn't lose, the mortgage person doesn't lose. Really, you as the buyer is who pays that cost, because you pay for an appraisal, you pay for an inspection, and you have an escrow deposit that in some cases the seller can keep if you do not meet those days in the contract. And I can tell you 100 horror stories of people trying to save $12, $13, $14 a month on the payment, and just really having some online bank that could care less about protecting their deposit and making sure they close on time, which is super important in this market. So where are rates, right? That is the million-dollar question. So as the market changes and the Fed pushes rates up, and I think that's the new normal that we're in now, it's more important not only to know where rates are at, but where rates are going. So like this is an article recently, and there's a million articles that interest rates have moved up. They've moved up a lot since last year. The average person's paying about $300 to $400 more for the same mortgage type, anything over $350, right now. So rates do obviously have a big impact on the payment. And where rates are going matter, right? Because if you're shopping for a house now, but you don't buy until 3 months from now, then obviously the rates today aren't going to be relevant. So, if you look here, and I'll just pull a few up. I've got Rocket Mortgage here. Today they're advertising 5.25%, but they're charging 2 points. A point is 1% of the loan amount. So if you have a $300,000 loan amount, that's $3,000. They're saying that rate costs $6,000. When you look at Bank of America today, they're advertising 5.25 at just under a half a point, and on the website, the Balance financial site, they're advertising 5.74%. And then I just Googled what are current interest rates, and I got 2 numbers. I got one showing 5%, and then another one showing 5.4%. So what are rates? Why is it so confusing? And that's again what makes this so difficult is every single lender out there is advertising what I call the unicorn. And if you're hunting the unicorn, you're probably going to be disappointed. So like if you look at this Bank of America rate, they're showing right here that that's with a 740 score or higher. So Fannie Mae and Freddie Mac have adjustments based on all of these factors: credit score, down payment, loan type, all of these things. And all lenders have to take those adjustments. So if you're a company and you're advertising a rate, you're going to advertise the lowest possible rate. Just like if you go car shopping and they advertise a super cheap car, you know when you get there and you add on anything, right? Like any options, navigation package, you kind of know they're advertising the lowest possible cost for that car, and you kind of know you're not going to pay that. Rates are the same way. Banks are advertising the absolute unicorn, and they're starting you at the top. So a lot of people get disappointed because they see a rate online and they say, wait a minute, I seen this 5.25 rate, and now, like that site, the balance was showing 5.75. Where's those differences coming in? So let's take a look exactly how Fannie Mae and Freddie Mac make lenders price in risk, and that's going to affect what rate you're going to get when you're buying a home. What affects interest rates? These are just some quick things: down payment, credit score, loan program, loan term, occupancy, lock time, and there are more. There's so many different factors that determine what rate that you get. So let's go through a typical scenario that I might get from a client that's putting, let's say they're putting 10% down. Let's say they've got okay credit. Let's say they got a 685 score. Let's say they're thinking of maybe buying a condo. And for this, let's say it's a second home. So all those factors go into pricing. So if you look here, I pulled up this Fannie Mae rate matrix, which you could just Google. Gave a condensed version here, but this is directly, you can Google Fannie Mae rate matrix, and that's where I got this from. So these are adjustments that Fannie Mae makes every lender take. So on that scenario here, you can see with a 680 score, these are adjustments to the yield, and these are not to the rate, but you can see someone with a 740 score and someone with a 620 score, that's for under 640 score, has a 3.25% adjustment instead of a quarter. On top of that, you can see here, if it's a condominium, there's adjustments. If it's a manufactured home, it's an adjustment. There's adjustments. Occupancy, huge adjustments for second home, for investment property, if they're multi-units. So what does this mean? It means that when you're looking at a rate online, that is going to be the absolute best case scenario. 740 plus credit score, 20 to 30% down, and there's usually some lender fees and other fees that they're building in. Remember, banks can make money from lender fees. They can make money from origination discount fees. There's some junk fees that they can put in there. And then, of course, on the rate, the higher rate, they also make money. So no matter what, most people I see get caught up by mortgage tricks. They either get a really low rate and they pay too much money for that rate, or they fall into someone saying, we'll pay your closing costs, or we'll do this special thing for you. And the truth is, all of it's being made up somewhere. If they're going to do this, then they're going to make it up here. And that doesn't matter who you're going to work with. So one way you can do is, I always say, Google a couple banks. You can go to Fannie Mae, Freddie Mac current rates, and just get a general idea of where rates are at. Okay, if you have a 740 score, rates are between 5.25% to 5.5%. Then that way, at least when you're talking with someone, you kind of know about where you should be. But with it, like for instance, that example with a 680 score, you could be well over a 6% rate when you factor in the condo adjustment, the credit score adjustment, the occupancy adjustment, meaning it's a second home. So that's where you want somebody that's super transparent. For instance, like when we have clients that lock in the rate, we go over all the adjustments so they know where these rates are coming from. And as a broker, we shop lots of different banks, so we're not beholden to any one company. And that's, to me, what makes a broker different, is we're not steering you towards any one particular bank or program. We're really trying to figure out where is the best deal on a mortgage. With us, we have no lender fees, so that keeps it simple. Really, you're just picking out the rate and the cost for that rate. So that's step number one. Step number one is to understand what the cost of lender controls. Again, I'll link to the video. Also recommend you watch the YouTube video I did. Two, figure out about where rates are at. And then three, Google the person that you're working with, because again, that is the main thing, that when you're trying to get your offer accepted and super competitive, you need to understand the numbers, you're trying to figure out payments, as you're looking at properties, you really need a partner, not only as a realtor, but as a lender that's helping you through the process, understanding the numbers, and especially in this market, helping get your offer accepted. Okay, so here are some final thoughts. One, figure out what fees the lender actually controls. Two, get a general idea where rates are at. And three, research the human being, the person that you're going to work with. Because at the end of the day, it is a process to get your loan closed, all the way from getting pre-approved, to getting good information, to getting your offer accepted, to getting closed and protecting your deposit and money that you're going to have invested in this transaction. So hopefully those steps help. If you have any questions on this or anything else, please comment below. Reach out to me directly. More importantly, let me know what I can do to help. Thanks. Talk to you soon.